you very much for that. But let's talk about IT. Yesterday, the IT stocks were doing well on the back of a Motilal Oswal upgrade. So Motilal Oswal had an underweight rating on the Indian tech sector, and they upgraded it to a mild overweight. They singled out Infosys as one of the big movers, but there were upgrades on a lot of other stocks like Wipro, Mphasis, Accenture, etc. Abhishek Pathak, research analyst, technology, institutional equities at Motilal Oswal Financial Services, is now joining us on the show. Abhishek, thank you very much for joining in. First, tell us what's driving this upgrade, because Indian IT companies are still struggling on the revenue front. And even if you look at estimates all the way out FY27 or even FY28, we're still talking about single digit, maybe low single digit moves to high single digits by FY28. So what explains the upgrade from here on, and how much upside do you expect now?
Right. Hey, Rima, thank you for having me here. Our call is actually fundamentally about the business cycle turning. We've been negative on the space for the last 1 year now. Infosys is a stock we downgraded earlier at the start of the year. Our model portfolio also has no IT, for the last 1 year. And that's largely because there has been no appetite for discretionary IT spending globally, right? I mean, the entire incremental tech spend has focused on AI capex and AI infrastructure. And we are now in the third year of the AI capex cycle. Now, historically, in year 3 or year 4 is when the spends start rotating back from hardware and infra to services. And that pattern has held true across multiple cycles. And we believe we are closer to that rotation now. So, we think that AI-led services deals will start picking up maybe in the second half of this calendar year. And that's when you start seeing a meaningful uptick in revenues over the next, let's say, 2-3 years. And the valuations being where they are, they mostly price in a pretty pessimistic scenario for IT services. And we believe if revenue growth rates triple from 3 to 4% right now to even 8-9% over the next 2 to 3 year period, we should be expecting a massive re-rating in the sector.
When you say massive re-rating, Abhishek, what kind of upside are you factoring in? Give us a sense of the upside on different stocks that you're tracking. And you already believe that we are at the bottom. So do you think we'll only see a one-way up move from here on?
Yeah, so I think, most valuations for large caps are either at their 10-year averages or at a significant discount to their 5-year averages, right? So I'd like to believe that whatever major headwinds the sector had to face, we're already pricing that in. If growth rates triple, if we are at the beginning of an actual technology implementation cycle, I expect a 20-30% re-rating in multiples and earnings upgrade cycles to come in. So most of our estimates or most of our target prices right now feature upsides between anywhere between 40 to 60%, depending on the stocks we're talking about. So, Infosys, we are pricing in a 40% upside. Some of the smaller names, Coforge, we are very positive. We believe the stock could do almost 70% upside over a significant period. Hexaware as well. So again, I mean, we believe that the payoffs are asymmetric. Most of the negative news flows are priced in, and if the cycle turns, there's a good upside to be had from these levels.
Abhishek, you mentioned the valuations. Fair enough that the valuations are beaten down, but looking at the commentary that the companies have given after the end of the second quarter as well, most of it comes to a conclusion that things have not changed much on ground, whether it comes to the demand scenario or whether it comes to discretionary spending. So is it just a hope that things will turn in a couple of years? Because as of now, at least for the first half of this year, things have not, and they have remained the same as they were over the last 12 to 18 months.
Right. This current down cycle exactly mirrors the cloud build out we saw from 2015 to 18, right? I mean, capex was increasing quarter on quarter, and we saw organic growth rates across the entire, IT sector reduce from 10-12% to almost 4.5-5%. Once the capex settled down, not reduced, just rebased to a different high level. We saw that services spend come in, and we saw growth rates accelerate across the board between 2017 to 2020. This is, like I said, I mean, this is more a call on the business cycle turning and the hardware spends morphing a little bit into services And it's played out before multiple times. And we're again there, and I believe that we have to brace ourselves for a turnaround.
So you're expecting 8-9% kind of revenue growth by FY28?
That's right. For the large caps, I'm at around 8.5 to 9.5%. For mid caps, of course, I mean, depending on the company we are tracking, we could go as high as 25%. But the range that I'm building in is between 15 to 25%.
Okay. And in mid caps, Coforge, you spoke about a 70% upside.
Right.
Which other stocks do you like in the mid cap space where growth rates are going to be closer to 25%?
We like Persistent as well. It's a fantastic team. They execute really well. But the valuations are a tad bit expensive over there, but we still like the name a lot. Hexaware is a name that we again really prefer. It's probably one of our top ideas for the next couple of years. And yeah, we also upgraded Emphasis to buy. We believe that the stock has gone through its own client-specific issues over the past 6 to 8 months, but the deal wins are quite strong. And the next 2-3 quarters, we should see a pretty smooth uptick in growth rates. So yeah, these 3 names I'd probably call out from a mid-tier perspective.
Abhishek, for starters, when you speak to Indian companies, what kind of productivity improvements are you seeing? So NTT spoke about 50% this year, going up to 70% in the software development cycle in 2 years. So that's question number 1. Where are we, in the Indian companies? And number 2, have you been able to quantify in your analysis now models for the next 2 years? What could be the contribution that comes, say, from generative AI or agentic AI? Like NTT's put a number to it at $2 billion.
Right. I think on the first question, in fact, we've kind of written extensively on this across the entire software development lifecycle, right? Be it low-level coding, testing, incident sort of generation, debugging, documentation. We should be seeing close to 40 to 50% productivity gains, at a steady state, right? I mean, these numbers are obviously not, kind of being implemented right now, but yeah, eventually we do see that kind of gain. Productivity gains are coming for the industry, and there is no 2 ways about it, right? I think the call is that there has always been a technology that's disrupted the previous model for IT services. And, these companies have been able to pivot successfully time and again. Likewise, we will see new models coming in. We will see, for example, service as a software being picked up far more often, right? We will see platformization or these services being offered as platforms far more often. And we'll see revenue per employee across the industry go up quite significantly to kind of counter these arguments. But at the end of the day, getting to Gen AI will need a significant amount of system integration work, a lot of sort of data engineering, a lot of new service lines will open up, which will kind of
Abhishek,
offset.
yes, on that itself, on AI, we've been talking about around $5 trillion spends by 2030. If you can quickly tell us, how would that impact Indian IT?
Yeah, I think so. CapEx is only the base spend assumption for IT, right? I mean, what happens when I want a higher ROI on that CapEx is when services comes in. So I mean that the same thing happened in cloud, right? Between 16 to 19, hyperscalers sold a lot of capacity, a lot of compute and cloud capacity to enterprises, but they did not know what to do with this capacity, right? To actually implement them, to actually shift my workloads from legacy to cloud, that needs a lot of work. So the arithmetic around whether we lose 3% growth from Gen AI and we get 5% extra, I think we are probably too early in the cycle to call that out. But if there's anything to go by how the early cycles have played out, there will be revenue accretive opportunities coming in the way, and the right companies who can honestly innovate a little bit and sort of disrupt their own sort of cycles, their own business models will probably do well, and those are the stock picks that we've gone with.
Abhishek, thank you for sparing time and joining us with these interesting insights on the Indian IT sector. The markets continue to remain very choppy. The Nifty Bank is now back into the green as we speak. We'll take a short break, focus on the crypto markets on the other side with Manisha Gupta.